honestly, when I'm out there talking with people and doing deal pitches, I'm I'm partly doing it for the deal I'm in, but I'm also thinking one step ahead, and I'm thinking about the deal I'm gonna have, in 6 months, 3 months, whatever the time is. Different mindset.
Welcome to the Cash Flow Chronicles. I'm your host, Jonny Catani, and the founder of Catani Capital Group. For the last 2 years, I've been studying alternative assets and now help solve the problem of creating passive cash flow for creators, influencers, and busy professionals by bringing you 5 episodes a week of easy to understand education in the world of passive investing. What's up, guys, and welcome to another episode of the Investor Relations Real Estate Podcast. I'm your host, Jonny Catani, and I'm joined today by Tony Castronovo. Tony, founder and managing partner of Novo Multifamily Group, is a seasoned multifamily real estate investor with experience in acquisition, due diligence, syndication, capital raising, construction, asset management, and overall asset strategy implementation. He is currently invested in approximately 800 units, including a combination of general partner and limited partner, co-GP, and independent ownership. Tony complements his background with a 25-year management consulting career, advising clients on project portfolio investment management. He holds higher education degrees in engineering and construction management. Tony, welcome to the show.
All right. Thank you very much, Jonathan.
I'm looking forward to this conversation. That's quite the resume you have, so I'm sure there'll be a ton of value here. But you've done a lot, right? Kind of take us back a little bit and, just kind of give us a Reader's Digest version of your journey to where you're at now.
Yeah, of course. Well, maybe I'll start just briefly on the career before real estate. I think it does bring a lot of skills that I was very grateful for when I got into real estate. So I've been a management consultant for the last 25 years. I left that role, that position, about a year ago now, and now I'm full-time multifamily syndication. But prior to that, I was doing both. I was a management consultant, lots of travel and many long hours, but I got great experiences working with clients really all over the country, even internationally. I think a lot of those skills did translate into my real estate career. Maybe not so much in the early days back in 2014 when I started in single family. But once I really started kind of leveling up into multifamily in 2018, I found that, all the things around, how do I work with clients and raising capital and building amazing presentations and doing deal pitches and all these things were very translatable. And so for a while I did both. And then eventually in 2021, I decided it was time just to make this a full-time endeavor. And here I am.
Awesome. I love that. Well, congratulations. I know that's a big step, and I'm sure it feels great. So, obviously, like you said, what you were doing lends itself very well to what you're doing now. Let's kind of just start at the beginning. What markets are you in? What has been kind of your bread and butter and getting you to where you're at?
Yeah, and I think like we probably all heard in various advice forums, if you will, pick a market and focus on that market, or maybe a couple of markets. And so for me, it's 3 markets. I invest in others and would invest in others, but really I've got to focus somewhere and get really intimate with those markets. So it's Houston, it's San Antonio, and Oklahoma City. A little bit of a triangle, kind of in my home base, which is in Houston. Now I do invest in the Dallas-Fort Worth area, and I used to invest in another sort of secondary market called Bryan-College Station, where Texas A&M is. Had a couple assets there that went full cycle. So I've invested in other places, but I think the focus for me is I want it to be landlord friendly. I want it to be a path of progress where people are moving, jobs are flowing, the typical check boxes. So that's where I've spent my time.
Awesome. I love that. And I'm sure as you've seen or are noticing, Texas is so I'm in Salt Lake City, like Utah, kind of insulated, right? 08 didn't crush us like it did other places. Really, this economic downturn doesn't seem to be having any effect here. I know Texas is pretty much the same. Are you seeing any changes? Is anything changing in your investment thesis at all?
I don't think anything's changed in my investment thesis, but the changes that I've seen are really just due to the market right now, all the things that we're all seeing at a macro level, where interest rates are driving sellers to have to rethink their pricing strategy a little bit. And maybe there's not a dozen offers all above asking, maybe it's a few and there's a little bit of wiggle room. And, you can, as a buyer, hope to have a chance of being competitive. That's kind of what I'm seeing. And I saw that first in Oklahoma City, and then it's kind of trickled into the Texas markets. And I think that's just a matter of, you look at like Houston, the fourth largest city in the country, San Antonio is the seventh largest city in the country, which most people don't realize. They think, oh, Dallas, that's the biggest city. I mean, San Antonio is kind of low on the radar here, but it is just solid and jobs are flowing there. And, but those cities tend to be a little bit more resilient. And sometimes I've talked to investors and they say, well, maybe we should kind of go to the secondary market because we can get a better deal on something and we can buy at a lower price. And I'm like, yeah, but in 5 years, you might be selling that property. And guess what? There's not going to be a lot of people looking for a deal and the competition's less, and you're going to have trouble selling. So I'd much rather compete now on the buy side and have buyers waiting when we're ready to sell that are willing to compete for it.
Absolutely. And that's a very under discussed, or I guess, under discussed sort of piece is the exit strategy, right? Is good operators know their exit strategy, at acquisition and, or have a couple exit strategies in play. So I like that you're thinking like that and noticing that, because that can be a factor. And, I mean, is San Antonio considered a secondary market?
Oh, no, absolutely not.
Okay.
I mean, it's a top tier market. And, people just don't, I guess they think of San Antonio more as like a tourist type of city in Texas, just because of the history, the Riverwalk, the Alamo, all these things that maybe people think about. But I mean, so Austin is less than an hour away, and Austin's red hot right now, as everybody knows. Right? Houston's always been a bellwether because of the energy industry, oil and gas. And Dallas, everybody talks about because a lot of California companies are moving headquarters there and whatnot. So it's always been strong. It'll continue to be strong. But San Antonio, I love it because there isn't as much competition as some of the other big cities in Texas, because people just don't seem to see the things that we're seeing. But we've known it all along, and there's a lot of big corporations there. There's several military bases, and population's growing and jobs are growing. So those are the fundamentals that we look for.
That's awesome. I love that. Always nice when there's not as much competition, especially down there. I know it was crazy for a while, and obviously will probably remain that way, relatively speaking, just because of those strong fundamentals in economics. So as you've grown Novo Group, what have been some of the keys in your partnerships and things that have helped you, get to this point where you were able to leave your longtime job and do this full time?
Yeah, it's been a bit of a journey. When I first got into multifamily, I like to say I opened my checkbook. That's all I knew. It was like buying a single family house. It was just bigger. And when I bought a single family house, it was just me. And, I go to the bank, try to get, the highest leverage loan that I could, pull in, my own funds to be able to get the rest of it covered, and then the CapEx, and, hopefully refi it quick and pull some cash out, move on to the next one. But when I got to multifamily, that hurt, because I didn't know what I didn't know. And sure, I could acquire it, but I had a renovation plan, and I had kind of a plan for how I was going to spend that CapEx. But what happens when things don't go to plan? And where do you get the funds? You're not raising that capital from anywhere. You're pulling it out of your checkbook. And that becomes kind of a stressful, lonely game. And thankfully, that property was an amazing first multifamily property. We refinanced it twice in 3 years. We sold it with a 31% IRR. And so it was a great first property. But what it taught me most was you need partnerships. And it also taught me, kind of opened my eyes to the syndication model and working with limited partners as well as general partners. But as I've gone through several other properties, what I've learned is, number one, I don't have to do all of it. I don't have to love all of it. I don't have to do all of it. I focus on the things that I'm really good at and passionate about. And then I find partners that complement me in the areas that either I'm not strong or I really don't want to do. And that makes a strong partnership.
Absolutely. I could not agree more. Complementary skills are really a major key. So what have you identified, and obviously the long list of different things we need to do along the way? What have you identified as your strengths and the things you like to do?
So at the risk of being cliche, I will say that my focus is capital attraction. And I say that a little tongue in cheek because, a lot of people would say capital raising, right? And for me, it truly is different. It's not just semantics. It's not just words. It's a different mindset. The way I look at capital attraction is I'm not just looking at the deal that I'm working right now. Of course, I need to raise capital for that deal. But if you approach me and that deal's not for you, or the timing's not right, it's okay. You know what? You and I just had a conversation and we planted some seeds, and you've gotten inspired and you got more educated. And the next time I have a deal, maybe it's the right time, maybe it's the right market, maybe it's the right asset. And that's okay. I'm in it for the long haul. And I'm looking to continue to bring value through opportunities to my investor base. I love talking with people and educating them and getting them excited about this awesome opportunity of multifamily real estate. But it doesn't have to be right now. Open your checkbook, wire the funds to this particular deal. That's the difference.
Wow, that's an incredible perspective. I love that a lot. And I know that, at least for me, that's something, as someone who primarily focuses on capital raising, that's a really, really great perspective. And super important, especially in the beginning too, right? So many people, I think, meet someone, talks with an investor, and they maybe have a deal right there. They're like, oh yeah, come into this deal. And it may not, and listen, and all your deals may look the same, right? But, that may not specifically be the right one for the investor. So maybe you give a bad taste to the investor, or, you come across as too salesy. And so I like this capital attraction perspective a lot.
Yeah. I honestly, when I'm out there talking with people and doing deal pitches, I'm partly doing it for the deal I'm in, but I'm also thinking one step ahead, and I'm thinking about the deal I'm gonna have, in 6 months, 3 months, whatever the time is. Different mindset.
Absolutely. Always be raising. Isn't that the cliche motto?
Well, I think it's always be selling, but
Yeah.
we don't want to sell.
No, never. Always educate. And you're really not going to. That's the one thing I've noticed about this industry. And I'm still pretty new, but you're really not going to sell anyone. You really have to educate and nurture and, keep people in your, that's why your funnel and your email list and everything, you got to take care of it. And, eventually, like I've heard countless stories of people like, yeah, this investor was on my list for 2 years before they finally wrote a check, you know?
Yeah. Yeah. It's really interesting that you never know where you're going to find the next investor or partner or business associate. Yesterday, I actually had a phone call from a previous tenant of mine. When I
Oh,
was
wow.
when I was in the single family days, I had a tenant and he rented one of my homes, and he got one of my emails recently on a deal that I have. And he's like, hey, I want to invest. I've been watching you for the last 8 years.
Oh my
And
gosh.
yeah. And those seeds are starting to sprout a little bit. And you just never know.
Yeah, wow, that's incredible. I bet that felt pretty good. So is he going to invest?
He's planning to. I haven't seen the money come in yet, but yes, all intentions are there.
That's awesome. That's so cool. And obviously speaks volume about what you've been doing, and also by, being able to nurture that list the whole time, because, it's important what's going on in the back end in terms of your CRM and all of those things as well. Is that part of what you focus on with your capital attraction? Is that stuff as well?
I do, but I kind of pause a little and reflect on that a little. I really enjoy fishing with the pole more than the net. And I know you have to do both. And I know that there's a lot of, syndicators that deal after deal after deal. And, you're getting like 3 emails from them a day on something. It's just not my style. Yes, I have a database. Yes, I have a CRM system. Yes, I send emails, but I complement that many times over with the personal reach outs, a phone call, an email, or a direct email, or a text message, or an in-person, let's go grab dinner or beer or whatever. And that takes a lot of time and effort. It's very easy to just hire a VA and get them to fire off your email campaigns 3 times a day. Again, I'm in it for the long haul. My effort, I feel, has a higher return, even though it feels like a lot of work. If I can convert people much at a much higher probability, then it's worth it to me. And I get to talk to people rather than send emails all day.
Absolutely. You're more of a quality over quantity. You'd rather have 100 solid investors with a good relationship than 1,000 and you only know 10 of them.
Yeah, absolutely.
That's great. I love that. What have you learned, like maybe misconceptions that you had about, this asset class, or, capital raising, or anything that you've kind of learned and, discovered along the way?
Well, I mean, anybody that's starting the process of raising or attracting capital, it seems really easy, right? Send a bunch of emails and the money just flows in. And it's not. It is actually, once people get into it, the comment that I hear from newer syndicators, capital raisers, is, wow, I had no idea how hard this was going to be. And whatever the goal is, whether it's $500,000, $1 million, 2 million, you have to find your own process. You have to find what works for you. You can look at other people and emulate what they do. And I do that all the time. I look and say, I kind of like that. I kind of like that. Maybe I'll mesh them together, and that's my process. And then you kind of fine tune it. And, people don't want to be sold to. They're willing to buy, but they don't want to be sold to. So you have to find, how do they buy? How do they think? And if it's education, they need to be super educated. If it's building trust and credibility, well, that takes years to do. So focus on that. And I'll tell you, that was a goal of mine, I set late last year, was want to work on branding and awareness and some of that credibility. And so even doing things like this podcast, or I started a local meetup in kind of West Houston, where I bring 50 people together every 2 months, and we cap it at 50. We sell out every time, but we cap it at 50. And we've talked about growing it, but it's invitation only. I don't throw the link out there and just say everybody sign up.
It's not on meetup.com.
No, because we want to have a core group of quality attendees that are constantly learning and developing deep relationships with each other. And, it doesn't matter what our numbers are.
Wow, that's awesome. I like that a lot. And so what kind of things are you discussing at this meetup typically?
So our format is we try not to have a whole lot of slides and push this content out to people. It's late in the evening, and people are coming after work and fighting traffic and all that kind of stuff. We don't want to bore them with slides. So we kind of primed the pump a little bit with maybe, a little bit of high level, grease the skids. And then we go straight into a guest panel, and we invite new people to join our panel each event. And topics have been things like, we have one coming up next week, actually. The focus is going to be more on, kind of common debt structures within a multifamily syndication, which is a very hot topic right now, right? Everybody's looking at interest rates and what is it doing to deals and how can we get creative. And so that's the topic for this event. Back in April, obviously tax time, we brought in a cost segregation specialist. We brought in our CPA. We really talked about tax strategies of real estate. So just, whatever sort of top of mind at the time we're doing the event, we pull that together.
I love that. And so you're obviously not, really heavily out there spreading the word all over, the interwebs. What has been some of the keys for you to attract capital?
I like to say, when you're starting out and you're thinking about, how do I raise capital? Look at your network and start drawing circles. So you're probably in multiple networks and you don't realize it. Some people just think, I just know a bunch of people. But if you start kind of putting them into some categories, like you probably notice, behind me here, I've got a few, running memorabilia here. I'm part of a running club, a running community that's almost 400 people.
Very cool.
I know all 400? No, but I know a good percentage of those people. So I draw a circle around that community. And then my corporate job, I was in a company for 12 years and I still have great relationships there. Draw a circle around them. I draw all these circles, and then the ideal place to spend your time is where there's overlap. If you have somebody that's in multiple communities of yours, you have a lot of credibility, a lot of trust built, and you need to double down on that.
Wow, that's incredible insight. I need to do that, actually. Wow, that's awesome. I love that. Yeah, because it's true. And I've noticed this as I've kind of gone on is, and I think you mentioned earlier, is capital comes sometimes from very unlikely places where you wouldn't have it really expected, right? Or been your first thought to give attention to. So I like that, sort of breaking it all down into pieces so you can really look at what you have available and then go and, focus on the right places. Wow, that's
Absolutely.
awesome.
Yeah.
That's awesome. That's great. So those of you out there who are brand new, take notes. That was a big one right there. And we're done. That's it. That's our, just kidding. So, as you guys, obviously now you're a year into this full time, what does the next year, 2 years kind of look like for you guys and moving forward?
Yeah, good question. So when I sort of laid out my goals for this year, I kind of put a theme to it, if you will, which was this is my foundation year. First year leaving my comfortable W-2 job with, the paycheck rolling in every 2 weeks, to something that's much more the wild frontier, right? I needed to fail a few times to learn from that and kind of see, where the pitfalls lie. But I set some lofty goals, but then again, I am giving myself, room to fail a little bit and say, I have to create this foundation first. If I kind of forecast a little bit, here we are in August, we're a few months away yet from the next year. But if I'm forecasting, I really think that I don't want to say hockey stick, I know that's an analogy people use, but I think I can take off in a lot of different places. And one place obviously would be my multifamily business. I've established some critical mass on assets. So I've literally, I did 2 multifamily deals between 2018 and 2020, maybe 2021. And then in 2021, I did one in I guess December. Then in February of this year, I did another one. Then in April, I did another one. And I'm in the middle of one right now.
Wow.
In the middle of all that, I sold 2 deals. So momentum is picking up. And I think that will continue going forward. Momentum is a real thing. But I also am trying to look at this at a bird's eye view and say, but is that really all I want? Of course, I want to be successful in the multifamily space, but as an entrepreneur, we can easily get sucked into the 80 hours stuck in a back office somewhere, cranking out spreadsheets, and that can be your life. And when you kind of look up from that spreadsheet and you go, wow, is this all that entrepreneurship is about? So what have I done about that? Well, I decided earlier this year that I wanted to pursue another career, and that is in performance coaching. And while I enjoy mentoring and spending time talking about real estate and helping newer entrepreneurs mechanically through the process, I really feel performance coaching is something that perhaps was a little bit of a destiny for me, that I've just kind of unlocked this a little bit of a passion. And I hope I'm going to be good at it. I think I'm good at it, but I'm pretty excited about it. And so this is a new business that I'm launching here in probably the next month or 2.
Wow, that's awesome. Congratulations. I know there's definitely a need for well put together coaching, right? I feel like you get a lot of gurus, quote unquote, out there who haven't really necessarily been through and seen it all. And you obviously have this awesome resume that, you have a ton of experience and life experience and different things that, you can certainly lean on. And so what would be your ideal coaching candidate, basically?
Yeah, great
Who
question.
would be?
Yeah, it's what I call my avatar, right?
Yes,
Who
your avatar
kinda is the right coaching client for me. I feel like, well, first of all, I'll say I'm still a little bit in an exploratory phase. I actually just this week launched a pilot program of coaching clients. So I'm taking on 10 clients. I have room for 3 more as of today. So not exactly sure when this will air, but regardless of when it airs, if somebody finds any inspiration in this, they want to reach out to me, we can always see how we can work them in. But I think that for me, where it's really going to be ideal is maybe that person who feels stuck in that W-2 job, somebody who's wanted to break free, to try to go out and be an entrepreneur, to follow a passion, but the old proverbial golden handcuffs. It's too hard to leave. It's not the right time, and then maybe even when they do leave, at first it might seem like nirvana, like finally I did it. Wow, this is amazing. I get to be my own boss and all these great things that come with it. But as I've learned, there's a journey to navigate, lots of ups and downs. You don't necessarily have a team, a company to lean on. You don't have an HR department. You don't have any of that. It's you. And that requires coaching to constantly be, self-inspecting yourself and assessing and making sure you're following what you want to be doing and build your life by design.
Absolutely. I could not agree more. I'm a huge proponent. I've talked to death about mentorship and coaching. I have a life coach myself, completely separate from, business, and certainly business is implemented in there, but, similar where, it's just about making me a better man and being a better person and, more focused on me than on business, which I kind of graduated from therapy to this. And so I'm a huge proponent of it for sure.
Yeah. I use the term work-life integration, which I'm not a big fan of the whole work-life balance thing that we've always heard. I don't aspire to have balance. I prefer to integrate. And what that means for me is I don't want it to feel like work. It's something I do as enjoyment, and I can earn a compensation from it so that I can pay my bills and live. But I want it to flow naturally into my day. And at my choice, I want to be able to work with who I want, when I want, from where I want. And to me, that's the ultimate entrepreneur goal. And why I made that leap. And I hope that other people can follow that.
Absolutely. I love that so much. Awesome. Thank you for sharing. So we'll wind down here into the final five. I'm looking forward to some of your answers here. First question, best advice you've gotten from a mentor?
I'll say and I don't know if I've seen this, so I'm going totally off the cuff here, but I'll say that I had a partner of mine that told me once, Tony, don't be a mom and pop, right? We buy from mom and pops. What does that mean? If you're operating a multifamily property, don't try to bring your expenses down to the bone where you're paying nickels for everything, because eventually you're going to jeopardize your service and your quality. And if you're not focusing on the revenue, which revenue solves a lot of problems, you will be somebody that we'll end up buying from at some point.
Wow. I love that. That's incredible. That's powerful right there for sure. Because a lot of people focus heavily on that, and certainly there is something to it. Of course, you want to reduce expenses if you can, but what do they say? A penny saved is a dollar earned, or I fully butchered that. Penny saved is a penny earned. I think it's probably one for one.
Benjamin Franklin. Yeah.
Yeah, exactly. Cool. Love it. What is it about your career that makes you feel like you're fulfilling your why?
I really feel that I get to choose, when you're kind of, I don't want to say trapped, but if you feel like you're trapped in a W-2 job where you're living out the mission of the company you're working for, well, imagine if you are your own boss of your own company. You get to carry out your own mission in the way that you see fit.
So true. I love that. Favorite non-real estate or investment related book?
Who Not How. I'm living it in so many ways. We probably don't have time in this podcast, but I just spent the entire summer living it out. I helped my son to buy a car by flipping a house, and we didn't swing a hammer. We found our who instead of our how.
I love that book. When I joined the mastermind group that I'm a part of, that book was part of the kind of welcome package, and holy cow, talk about mind blowing. Super easy read. I've talked about it on this podcast. Super easy read. You can probably get through it in like a day, but it's so powerful.
Absolutely.
If you could have any superpower, what would it be?
My superpower?
Or no, if you could have any superpower.
Oh man, wide open there. I want to keep inspiring people, and so if there's more opportunities for me to make connections with people and to be able to grow those connections, that's all it's about.
Love that. Thank you. What's the best way for people to get a hold of you and learn more?
So they can always email me at Tony, Tony, at Novo, Novo, multifamilygroup.com. And they can always go to my website, which is novomultifamilygroup.com. From there, they can see a little bit more about me, our company, our portfolio, as well as they can subscribe to our investor database.
Awesome. We will link that in the show notes. Tony, this has been so awesome. Really appreciate all of your insight.
Of course. Thanks for having me.
Absolutely. Thank you again for tuning in. Who do you know that wants more cash flow? Share this episode with them so you can grow your cash flow together. If you enjoyed the show, make sure you're subscribed on your platform of choice so you never miss a new episode. Go to CastronovoCapitalGroup.com to learn more.